We've never been here before. There's no resemblance in whatsoever with regard to a free market in any asset class. When you have central banks around the world, not just ours, artificially suppressing rates now for over a decade, the price of any asset is not real.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with silverdoctors.com, and back with us today is Greg Mannarino from traderschoice.net. Greg, thank you so much for joining us today.
Great to be back here. Thank you.
Why don't we go over the stock market? This is something that you talk a lot about on your YouTube channel, but we just saw the first high for the Dow since January, just a few days ago. What is your perspective on, is this new momentum in the stock market we're going to see again?
You mean, is it going higher? Yeah, it's going higher because there's nowhere else for people to go. I mean, this is the environment that has been created. We have suppressed interest rates, so you can't be in a bond. You really, I mean, the twisted environment demands that cash simply continue to move into places where it shouldn't be going. In my opinion, it really should not be going into the stock market here. But there's nowhere else for an investor to put cash to work. It's fake. It's absolutely not real. It's inflating an epic bubble. So for now, because there's nowhere else to go, we're going to continue to flow into the market week after week until it doesn't. I had a long time ago trying to figure out when this whole charade was going to come down, and it's an impossibility in this environment. We have a managed market where nothing is real. Knowing that, I mean, it makes it pretty simple for us to capitalize on this. But there is going to be that moment that you and I and a lot of guys that have spoken about for a long time where we hit that wall. Don't know when. All I know is for now, I'm trading the market I have, as fake as it is. I'm not even thinking about what's coming really too far down the pike here.
What do you think is causing this continued rise, and especially the Dow?
Oh, well, it's very, very simple. You got it's suppressed interest rates that are forcing cash into the market. It's stock buyback programs these companies are buying back shares of their own stock like we have never seen in history. It's an unbelievable thing. Oh, stock shares full. Guess what? Company comes out and says, hey, you know what we're going to do? We're going to start buying back more shares of stock. And they're trying to play this up as if it's a good thing for shareholders. But the fact of the matter is, if these companies want to return capital to their shareholders, what they would really do is raise the dividend. They wouldn't get in here and buy back shares of their own stock to rig the price. That's what's been going on now for quite a while. And again, it all comes down to easy money policy by the Federal Reserve for as far as the eye can see. Our president tells us this is as good as it gets. Well, if that's the case, why has not the Fed normalized rates yet? Makes no sense to me. Shouldn't make sense to anybody here. People are getting robbed still. Those people out here who have an interest earning account are losing purchasing power every single day that they have that account open. It's theft on an unimaginable scale. But people are so dumbed down, they don't even think about it. They think, oh, it's a good place. I'm going to keep putting my cash in my savings account that's earning less than the actual rate of inflation. It's unbelievable. But people are allowing this to happen, believing the nonsense that they're being fist-fed from the mainstream financial channels, and it's frankly disgusting.
As an alternative to the stock market, or, as an alternative to holding your money in the bank, which, your argument is, inflation essentially just reduces the value of that money held in the bank. So as an alternative, some people have come up with Bitcoin. What is your perspective on that? It seems like the way it's designed is you only have a certain amount of Bitcoins that can ever be created. So in that sense, it's, over time, some people have argued that, it would increase in value. And we've definitely seen that from it going from, just pennies to now $6,000, hitting its peak back in late last year at about $20,000. So what is your perspective on Bitcoin? And then for like the short term, what is your perspective on the price action we've been seeing recently?
Sure. Well, I'll tell you, I really do like the concept of a decentralized mode of transaction here. However, the issue with Bitcoin now, for me, and I've admitted this on my own blog for a while now, I've lost the ability to actually put a value on it myself right now. As you probably know, I was following Bitcoin and cryptocurrencies very closely for a while. I owned them. When it hit 2,700, I was telling people to buy it. I was buying it myself. I said it was going to 5,000. I wrote an article on Steemit about it. When it hit 5,000, I was buying all the way up. I told people it was going to 10,000. I continued to buy. Then I kind of thought it looked a little bubbly to me. So I got rid of my Bitcoin. It's around $9,000, $9,200 or so like that. So I did okay. It subsequently did vault to 20,000. When it got up like that, I came out screaming from rooftops, literally at that point, telling people to dump it. As you might even know, I was kind of ridiculed for that for a while. Oh, Greg's crazy. It's going to 40, 60, 80,000. Well, guess what? I nailed it almost to the day, and it plunged. Subsequently, where it is now, I honestly don't know. I did, honestly, let's see, about 2 weeks ago, we took a hit here in cryptocurrency. I wrote an article 5 days before the cryptocurrency family out there, all the cryptos out there, most of them took a hit, or the big ones. 5 days before that, I wrote that article, boom, I said it was going to take a hit, and I expected it to be short-lived. Well, that's exactly what happened. I do follow it, but I don't own it now because, again, I can't value it correctly. I would not advise anyone to get into it without doing an exhaustive amount of research moving forward. My forte here is equity derivatives. I know how to price them, although they're fake too, but I know how to take advantage of it. I think easier. Maybe I should put it in that way. So for a short term, for someone like me, that's what I'm doing. I'm moving in and out of positions here. I am exclusively trading credit spreads of late. I've been explaining this to everybody. It's a safer way to do it, to trade here. And I don't know what to tell people here. There are no values anywhere in this. You want to put money to work in the stock market, buying straight up stocks. You got to be pretty damn brave here to do that. I'm not trying to put a point. Oh, this is where it's going to go down on. It could go up for another year or two. It could go up for another day or two. I don't know. So I think we're going to get through the midterms here with the market moving higher. That's the mechanism here. Prop it up. Use it as a distraction, as a political tool. People look here, don't look here. And we'll see what happens after the midterms. And we'll have to reevaluate. But, it's not just me. We got warnings from major Wall Street banks, hedge funds, investment funds over the past several weeks like I have never seen before. Talk about this market is in bubble territory and people should be ready for something. Big name people like Ray Dalio, guy who runs the largest hedge fund on earth, is telling people to be ready for something. J.P. Morgan, Morgan Stanley, Goldman Sachs, all the same things. So, saying it's happening tomorrow, but there's a lot out there we need to start paying attention to. And the environment still remains risk on. That means cash is going to flow into the stock market as long as they keep rates suppressed. We're going to get a rate hike this week. It's coming out Monday. I've been broadcasting this for a while now. 25 basis points to the federal funds rate. It's priced into the market. Market will probably go higher on that news because it's priced in. I explained the same thing to people with regard to these new China tariffs. Everyone thought it was going to be a disaster. I said, no, it was priced in. Market was going to go up. That's exactly what it did. So that's what we're going to see here too.
Now, with regard to the Fed meeting coming up and the decision, about raising or not raising interest rates, what is your perspective? What do you think they're going to decide, and how will that impact the markets? Or is it, like you're saying, already priced in?
It's already priced in, 25 basis points federal funds rate. Market will respond positively to that. If we get a 50 basis point, which I doubt, some people are saying that, I don't think so. That's not priced into the market. The Fed doesn't want to rock the boat. So that's what we're going to get, in my opinion. And I think the market is going to respond in a positive way. I think if we do not, for some insane reason, because the Fed has to keep the illusion real that we're in the best recovery, that they have all the bases covered, or it's not anymore, it's a boom. So they have to do something. If they don't do something, it will rattle the markets. If we don't get a rate hike this week for some incredible reason, the markets will fall. Because the illusion will not be so real. And if we get a 50 basis point hike, which I sincerely doubt, that would also cause the markets to react in a negative way.
Now, why is it that a rate hike would cause the markets to go up? I mean, it seems like a rate hike would be bearish for the market. It would be tightening credit. No,
not here, because, again, it's all about conception here. It's not even about anything like you just stated here, which would make sense to the average person who's listening to this. But in a market that we have here, where it's absolutely distorted, the stock market has no bearing on reality. Multiples that are in bubble territory. I mean, it's no secret here. It's not just me; it's mainstream people talking about it. And the Fed has got to do something to keep. It's an illusion. It's all about confidence. It's all about believing the environment they're in is going to continue on. And it's always the same story. The Fed has got to do something to keep the illusion real, creates confidence. The market runs off of that. So this is why we're going to get it. If we do not get it, the market would react in a negative way. There's no doubt about it. It's being priced in now in the bond market too. We've seen the U.S. 10-year yield rise here. So without it, it would shake the markets. Said about it.
All right. Well, Greg Mannarino, thank you so much for joining us today. I guess before we let you go, were there any last topics you'd like to cover?
I want people to just understand that it's a managed market. We've never been here before. There's no resemblance in whatsoever with regard to a free market in any asset class. When you have central banks around the world, not just ours, artificially suppressing rates now for over a decade, the price of any asset is not real. It's based off of an artificially suppressed debt market, for which is the largest market of them all. So if the debt market is being artificially faked or suppressed, how can the price of any asset out there that anyone can name be real?
That's very interesting. I mean, it really does, as you're saying. I mean, if they're, it's their policy to control the interest rates. So how can really any other market be real? I guess what would be your perspective on, what would be your insight to give people of what does that mean for their own personal situation, that, any of these markets, they're really distorted because the central banks are manipulating their, it's their policy to control the interest rate. So how does that impact them, their own financial lives?
The middle class is in more trouble than they can possibly imagine moving forward. Housing bubbles, stock market bubbles, debt bubbles, inverse bubbles with regard to metals. So, it's an environment of extremes, and I mean extremes. So the extremes will correct. And unfortunately, Elijah, this is going to unfold in a disruptive way that people have no idea how bad this can possibly be. Let's just listen to guys like Ray Dalio, a multi-billionaire investor, hedge fund manager, is saying that there could be social unrest like we have never seen before right here in the streets of the United States. Now, who does that sound like? Doesn't that sound like me? I've been warning people of that for years. So don't listen to Greg Mannarino anymore. Listen to Ray Dalio. He's got a lot more money than me, more money than most people on the planet. So if you want to take your advice from a guy like that, well, maybe you should. I don't know. But this is just ugly all over the place. It's going to come down to a resource problem. At one particular time, we're going to see a repeat performance of the 2008 credit freeze, where banks shut down. That's what happened. People don't understand that. The reason why that they went in there and the Federal Reserve introduced massive capital injections into the market was to unfreeze the credit markets. The banks would have closed their doors. There would have been no cash for anyone to get. Transactions would have stopped if they did not do that. Businesses closing, I'm talking about across the spectrum, jobs being lost. So this time, what's the Fed going to do? More capital injections? The currency is the issue. It's a debt unit. So the issue is debt. So they got a lot of problems moving forward here. And we could face an event that I would say on a biblical scale moving down the pike. It's very sad.
Now, you were talking about the possibility of social unrest. Now, I'd assume a lot of people nowadays would think that it would come from something political. There was a lot of protests, after Trump got elected. And
this is nothing. People won't be able to acquire food. They won't be able to acquire basic things that they need. That's what I'm talking. These kind of protests have been going on since time immemorial. People protest over everything here. Is it a little more in our face? No, yeah, sure. Why? Because we have the internet. But this stuff has been going on since for every single president down the pike. But the issue, what I'm talking about, social unrest. I'm talking about people, trying to feed themselves. People resorting to crime on a massive scale, like we've seen in South American countries, Venezuela, for example, where people had to go to the zoos to eat animals from the zoos because they couldn't get food. Eating cats and dogs in the street, robbing, crime, flying through the roof. I mean, this is what we're going to see here in the United States, potentially in a full-on meltdown. And this would be a global event. So, I mean, look, I hope we never get there. I really do. But it's a possibility that we will get there because this is where no man or no woman has gone before, like Star Trek. And it's almost like a Disney movie. A horror movie or something along those lines here, because the issue is debt. People don't want to understand that the mechanism here of borrowing in perpetuity cannot stop. This is why we cannot have a balanced budget. This is why deficits and debts will continue to explode. They can't fix it. And this is why this president here has outspent the last guy in this short amount of time since he's been president. He can't stop. It's the mechanism. Once we admit we cannot borrow anymore, we have an implosion. And that's it. Done. Credit markets freeze, banks close, no cash, businesses shut down, jobs are lost, and we end up in a Great Depression. That's actually what Ray Dalio was warning of a Great Depression worse than the last time. And he's absolutely right.
All right. Well, Greg Mannarino, thank you so much for joining us today. Hopefully, people can, hear this and, make up their own decision whether they, think it is prudent to prepare for all this. And yeah, thank you so much for joining us today. And where can people find you online?
Go to my website, traderschoice.net. Everything you need from me is right there.
All right. Once again, thank you so much for your time, Greg.
Great to be back here. Thank you.
Followthemoney.com. And yeah, thank you so much for your time and all the work you do.
My pleasure.